Mid-year is the perfect time to review your finances, but many W-2 employees, side hustlers, and small business owners avoid checking their tax withholding out of fear. They worry that adjusting their settings will lead to complex math or trigger a massive tax bill in April. In reality, checking your tax withholding mid-year is the most effective way to prevent tax season panic. If you got a raise, changed jobs, had a baby, or started a side hustle, your current tax withholding settings are likely outdated. By making small, calculated adjustments now, you can control your cash flow and ensure you do not owe a large sum when you file. We will walk you through the math of mid-year withholding adjustments, explain how the timing affects your paychecks, and provide a clear process to update your Form W-4 without stress. Let us examine how the timing of a mid-year adjustment affects your paychecks. When you adjust your withholding in January, the changes are spread across the entire year, resulting in small, incremental adjustments per pay period. However, if you wait until July or October to make a change, you have far fewer pay periods remaining in the tax year to collect or reduce the necessary tax. For example, if you determine in July that you will underpay your taxes by $1,200 for the year, you cannot simply deduct $50 per month as you would have in January. Because there are only 6 months left in the year, you must withhold $200 per month to cover that same $1,200 gap. This time compression means that late-year adjustments have a much larger impact on your monthly take-home pay. Conversely, if you have overpaid your taxes and want to stop over-withholding, a late-year adjustment can significantly increase your remaining paychecks. However, this is why mid-year is the critical sweet spot. Waiting until November or December makes the math extremely tight and can result in dramatic cuts to your take-home pay just to avoid a penalty. By checking your withholding in June or July, you give yourself ample time to distribute the adjustments smoothly over multiple paychecks. It prevents cash flow shock while ensuring you meet the IRS requirements, which demand that you pay at least 90% of your current year's tax liability through withholding or estimated payments. Understanding this math prevents frustration when you see the final calculations. A common error is assuming that the adjustment calculated by tax tools applies to a whole year. You must remember that the payroll system operates on a per pay period basis. If you tell the system to withhold an extra $50, it will do so for each remaining check, which is why calculating the exact number of remaining pay periods is crucial for your accuracy. Next, let us go through the step-by-step process for calculating your mid-year adjustment. To begin, gather your most recent pay stub and your tax return from the prior year. Look at your pay stub to find two key numbers: your year-to-date gross income and your year-to-date federal income tax withheld. These numbers represent what you have already earned and paid. Next, project your income for the remainder of the year. If your salary is stable, multiply your gross pay per period by the number of remaining pay periods in the year. If you have variable income from a side hustle or commissions, estimate this as conservatively as possible. Add these projected earnings to your year-to-date gross income to estimate your total annual income. Once you have this estimate, you can calculate your expected tax liability. You can do this by applying the current year's tax brackets and standard deduction to your projected income, or by using the official IRS tax withholding estimator tool. Subtract the federal tax you have already withheld year-to-date from your projected total tax liability. The resulting number is the remaining tax you must pay by December 31st. Finally, divide this remaining tax requirement by the number of paychecks left in the year. This final calculation tells you exactly how much federal tax must be deducted from each upcoming paycheck to ensure you break even at tax time, avoiding both a large debt and a massive refund. For instance, if your projected tax is $10,000, and you have already withheld $4,000 by the end of June, you need to withhold $6,000 over the remaining pay periods. If you get paid bi-weekly and have 13 pay periods left, you divide 6,000 by 13, which equals $461 per paycheck. If your current paycheck withholding is only $300, you need to increase it by $161 per check to avoid a penalty. We look at how to implement these changes on a new Form W-4 and monitor the results. To increase your withholding, the easiest method is to use Step 4C on Form W-4, which is for extra withholding. On this line, you write the additional dollar amount you want deducted from each paycheck. In our previous example, you would enter $161. If you need to reduce your withholding because you are overpaying, you can enter an amount in Step 4B for deductions, which reduces your taxable wage projection. Once you submit the updated form to your employer, monitor your next 2 pay stubs to verify that the change has been applied correctly. It is common for payroll software to experience a delay of 1 pay cycle before implementing updates. Furthermore, you must remember that mid-year adjustments are temporary solutions. Because they are calculated based on a partial year, the math will be incorrect when the new tax year begins in January. For example, if you increased your withholding by $161 in July, keeping that same setting in January will result in massive overwithholding for the next year. Therefore, you should submit a fresh W-4 in January to reset your withholding to a standard annual rate. Following this cycle of checking your withholding in July and resetting it in January is a highly effective habit that ensures your cash flow remains stable and your tax obligations are met without stress. Keeping a simple calendar reminder for these 2 dates will keep you ahead of the game. Taking control of your payroll details in this manner removes the guesswork from tax season, allowing you to manage your household finances with absolute clarity and complete peace of mind. Tax Season School helps freelancers, W-2 employees, side hustlers, and small business owners understand tax deductions, forms, deadlines, and common filing mistakes in simple terms. This channel is strictly for educational purposes and does not replace the advice of a licensed CPA, tax professional, or attorney. Always consult a qualified professional before making tax decisions. This video is general tax education, not professional tax, financial, or legal advice. Tax laws vary by state and individual situation. Always consult a licensed CPA or tax professional.